Oh man, so Bitcoin is fighting for a key level at $20,000. We are wicking below it and then back above it, then back below it. If we cannot hold this level on Bitcoin, things could get quite a bit nasty. I'm going to show you what the key levels are in the charts, what we need to look for, and how low we could be going on this move. I'm also going to share what could be our potential bounce case, which I think is not as likely. Look, Jerome Powell really did put his foot down on Friday, and we know this is going to be a tough week to navigate here for crypto. So let's see what we need to look at in the charts. Don't forget to smash the like button. Don't forget to subscribe. As always, if you want to buy any crypto, you can do so using BYBIT or BitGet. Links in the description. Now, as you can see, I'm sitting here on the 5 minutes on a Sunday because I'm a sado, and what you can see here is the price is just fluctuating up and down across this psychological level of 20,000. Remember, I said there's going to be some psychological support at 20,000. Now, my personal take, of course, do your own research, is I don't think this level can hold for too much longer. I think this is not structural support in the charts. I'm going to show you what I mean, but it is psychological support. 20,000 is a key level, and you can see it fighting desperately to hold this level. If I bring out the VPVR, you can see the red line, which is your point of control, is showing you that this 20,000 level is a really important level. There's a lot of volume, and then it thins out to the top side and to the bottom side thereafter. So whoever wins this battle, whether it's the bulls or the bears, they're going to have an easier chance of moving the price once we get through this key level. Now, let's zooming up the different time frames. This is your hourly chart, and you guys can see what's happening, right? We had a big move to the downside. We consolidated, Fed meeting, thrown to the downside, and now we're consolidating here at that 20,000 level. Remember, the price target, the technical price target from this move is in that 19,200 to 19,300 range. Now, why is that important? Well, look at the greater pattern which we fell out from. What did I say? Pivot point number 1. That's where we held initial support. Then we broke down because of Jerome Powell. Now we're coming to this level here, which is the 20,000 level, which if we go back and watch my videos, I said this is going to hold us some psychological support. But once we lose that, we will be coming down to the next pivot point, which for me is at 19,200. And then I'm looking at the bottom of the channel at 18,700. That's where I've got some limit orders set between 19,200 and 18,700 to pick up some more Bitcoin. Once we've then done that, you can see exactly where we are in this pattern, right? We are in this channel. We are in this channel, which I've been talking about for a very long time, between these two green lines. And now, initially, we had a chance of trying to get back in. That's long gone, right? Jerome Powell throwing us to the downside. Now we need to hold 20. If we can hold 20 and work our way up, great. Most likely, however, I'm expecting a fall down, like I said. And then, once we go test the bottom of the channel and start spending time here, things start to get worrying that you can lose the bottom of the channel, okay? And then if you lose the bottom of the channel, not only can we go test the lows at 17,600, but it could get even worse, right? It could get even worse, and you could be looking at levels such as 16,200, which is this support line here, is 16,200. So that's what we're looking out for now. I'm not going to call out any other crazier price targets. Technically, you can, right? You can draw out different patterns, and you can get evidence for bigger breakdowns to the downside, but let's take it step by step. We've got to hold 20,000. If we cannot hold 20,000, I'm looking at 19,200, okay? Very important. I'm looking at the bottom of the channel here at 18,700. Then I'm looking at 17,600 from there. Let's focus on those. It's not helpful for somebody to come and say, oh, we're heading to 10,000 on Bitcoin. How is that useful for you? Right? What's more useful is that you know what you're seeing in the chart, you let the data lead you, and you make your decisions based on that. So for me, very simple. I'm not selling anything. I'm holding like I continue to hold all the time. That's my personal choice. You do your own research based on your conviction. I'm fed up with people not taking responsibility. Take responsibility. You do you. I can give you the list of my exact buys, which I would never do, by the way, but I could. And you still would not get the same results as I would, and I wouldn't get the same results as you if you gave me your list of buys, because it's all based on conviction, and that's all that matters. When I'm sleeping and I'm not updating a video and the price moves quickly, what are you going to do? Are you going to panic sell? Are you going to buy more? Are you going to buy the dip? That's what makes a difference, and nobody can ingest that into you. That's something you've got to learn on your own and take responsibility for. So all of these people who are new into crypto trying to shirk responsibility, go find another channel. Go find a Moonboy channel. This channel's not for you. It might become a channel for you once you get burnt a few times with those moon boys. But once you're ready to, really level up your trading and really understand that you need to take responsibility, then this is the kind of content you want to be listening to. Because I'm not sitting here telling you that the price is going to go to 100,000, nor am I telling you the price is going to go to 5,000 on Bitcoin right now. We're doing it pragmatically. We're letting the data lead us. And then I'm making my decisions. You guys go ahead and make your decisions. I'm just sharing what I'm doing. Right? If that's useful for you, fantastic. I'm not here to tell you what to do. I've heard some people saying I'm shilling Bitcoin. Like, come on, are you just throwing around silly terminology which you don't even know what it means? It's so childish. I'm shilling Bitcoin. How do I benefit from you buying Bitcoin? Could not care less. Right. So that's what we're looking at here on this chart, okay? Those are the key levels I'm looking for. A few other important things. It's not a super busy week in terms of macroeconomics. We do have a few things. You've got Fed Williams speaking on Tuesday. You've got your important non-farm payrolls on Friday, which we'll cover off. You've got consumer confidence coming in. We'll get a reading on that this week. And also, we will get a job openings, jobs figure as well. So we'll keep an eye on that. Nothing too huge that's going to move the spectrum like last week. But I think it's just going to be a week of the markets licking its wounds. I can't think of a way that the markets are going to shrug this off too quickly. What Jerome Powell came out and said was quite strong, right? It was quite strong. It was quite aggressive. He didn't mince his words. Put the markets back in the position, and he said, look, I don't want you guys to get too excited. And as you can see, the market's slowly starting to take that onto the board, right? 61% have now priced in 75 basis point rate hike. That is why we're seeing a bunch of red in the market. And you know, the fear and greed index is now back at 28. And this is interesting. One thing I did want to show you here is you can see the fear and greed index is sitting at 28 and Bitcoin's at 20,000. The last time Bitcoin was at 20,000 was July the 11th. Now, if you go back to here on this chart here and you go back to July 11, what you will notice is fear and greed index on July the 11th was 22. What you notice is once you've been as low as a price, markets get accustomed to that price. So the market's starting to get a little bit more comfortable with 20,000. So in order for that same level of fear to be in the market, right? So in order to get a 22 score, you're going to have to go lower than 20,000 now. So that's one of the important things what you need to look at when looking at fear and greed index is once a market spends too much time, it becomes accustomed to it. Fear isn't in the market. That FOMO isn't there. So you need to fall lower before that fear comes into market. And that's when I'm personally looking to do my dip buying, right? I think that fear is going to come in as we fall below 19,200, as we get to 18,700. If we lose 18,700 level, I think the market's going to become very, very fearful. And that'd be a really great opportunity for me to set some limit buys to pick up some more Bitcoin for me personally. Okay, don't forget we did have good PCE data coming out last week that did notch down. That's a good sign in the underlying economy. But again, Jerome Powell is just reminding everybody this is not enough. Do not get excited by 1 month coming down. We've got plenty more work to do, and he's going to continue to do it. So it's going to be a tough week for the markets. We'll pay attention to that. Also want to take a quick look at dollar index. Remember, the dollar index is what's telling us what's going on right now. Remember, people flock to the dollar in times of difficulty. And you can see here on the hourly chart, continued strength here from the dollar index. Okay, it went and posted a little high here on the hourly at 109, came off for a little bit of a cool down. Now seeing a good number of positive candles here. If I show you that on the daily chart, you will see just how much strength we're getting here on the dollar index. I mean, excuse my arrow, but that was my prediction of what was going to happen. And you're seeing we're getting that bounce now. If I bring out the EMA ribbon, you can see how extended it is. It just had a little bit of a cooling off, and now it's ready to go post a higher high. So what we were hoping for was a double top pattern, right? Our only hope here for the dollar index to fall was to create this double top pattern and break to the downside. Unfortunately, it looks like it's showing a little bit of strength here. Okay, and if we show you that on a weekly chart as well, look at the strength here on the weekly chart of the dollar index. I mean, huge week here. Closing a body candle above the previous high body candle of this candle, and it's showing good strength, and that's not great for crypto. And I think it's going to show further strength this week, and I think that's going to spell some more red in the markets for crypto. So not expecting any crazy rallies this week. Expecting maybe more risk to the downside, setting my limit orders, getting ready to dollar cost average into my favorite plays. And I love taking this as an opportunity to continue to build my conviction, to make sure that I'm looking at my portfolio, making sure I'm saying, okay, what am I underweight in? What do I want to accumulate right now? Because we're getting another chance, and this chance may actually be here for a while. So let's take this opportunity. Let's look at where are we underweight and try to dollar cost average. That's what I'm doing personally in the market. Let me know what you're doing in the market in the comments below. Don't forget to watch this video here, and I'll see you in the next one.